Hey everyone, and welcome. Today, we are going to dive deep into something really cool, the market's hidden personality. We're going to learn how to actually read its mood and maybe even anticipate its next move. And we're not going to do it with guesswork, but by understanding the powerful options flows that the big institutions really pay attention to.
So, have you ever just looked at the market and felt like its moves were completely and utterly random? I mean, one day it's super calm, the next day it's just pure chaos. It can feel totally impossible to get a real read on its character. But what if that wasn't actually true? What if you could actually know the market's underlying personality on any given day? Well, here's the thing, you can. You see, institutional traders, they don't see randomness. They see a language, a secret language of flows that's driven by the options market. And today, we're going to decode that language together. Okay, let's dive right in. All right, so our journey starts with three fundamental forces. You can think of them as three hidden flows that are basically the market's engine. They're called gamma exposure, or GX for short, Vanna, and charm. And trust me, understanding these three is the absolute key to unlocking everything else we're going to talk about. And this table here, it just lays it all out so simply. The easiest way to think about this is with a few analogies. Let's think of GX as the market's gravity. It controls the stability for that day. Then you have Vanna, which is like the wind, creating a directional drift over a few days. And finally, there's charm, which is like the tide, a slow, predictable pull that happens every single day. Okay, so first up is GEX, the market's gravity. All this really measures is how options dealers have to adjust their hedges when the price moves. Now, when GEX is positive, dealers are hedging against the trend. This actually dampens moves and keeps the market stable, kind of pinned. But when GEX goes negative, oh boy, they're forced to hedge with the trend, which is like pouring gasoline on a fire. It amplifies the moves and creates a ton of volatility.
All right, then we have Vanna, the market's wind. Now, this flow isn't about price changes, it's all about changes in volatility. So, you know how after a big event, volatility just collapses? Well, that can create a really powerful buying pressure from Vanna that pushes the market higher for days. And on the flip side, when volatility spikes, it can create a strong selling pressure. It's the multi-day drift you can feel in the air.
And last but not least, we've got charm, the market's tide. Now, this is the most subtle flow of the three. You know how options lose value as they get closer to expiration? That's called time decay. Well, this decay forces dealers to tweak their hedges, and that creates this super predictable, slow-moving buying or selling pressure every single day, just like the tide coming in and out.
Okay, so you've got gravity, wind, and tide. Simple enough, right? Well, here's where the magic really happens. When we combine these three flows, they reveal something amazing. The market doesn't just have one personality, it has four. These are what we call the four market regimes, and they dictate pretty much everything, whether the market's going to grind, chop, rally, or even crash. First up, we have the green regime. You can just think of this as the calm bull grind. You've got positive GEX giving you stability, and positive Vanna creating a nice upward drift as volatility eases off. I mean, this is the perfect environment for a slow, steady climb. Any dips are super shallow and just get bought up right away. The market just feels calm, cooperative. Then there's the yellow regime, or as I like to call it, heavy chop. Now here, GMEX is still positive, so the market is kind of pinned and wants to mean revert. But Vanna is negative, and that creates this downward drag. So what's the result? A super frustrating, grumpy market where every rally just gets sold off and the price goes absolutely nowhere. It feels like every breakout attempt just fails miserably.
And then things get really fun. This is the blue regime, the turbo melt-up. This is where things can get absolutely explosive. GX is negative, right? So dealers are forced to chase the price higher, which just amplifies the whole move. You add positive Vanna from collapsing volatility on top of that, and you've got a fire hose of buying pressure. If you remember that massive squeeze higher after the CPI report back in November 2022, yep, that was a classic blue regime in action.
And finally, the one you have to be really careful of, the red regime, also known as the gamma trap. Here, both GX and Vanna are negative, and that creates a terrifying feedback loop. See, as prices fall, dealers are forced to sell, which, you guessed it, pushes prices even lower. And as panic sets in, volatility spikes, and dealers are forced to sell even more. This is the basic anatomy of a market crash, exactly like what we saw back in March of 2020.
So that's a lot to take in, right? Four different personalities: calm, grumpy, euphoric, and panicked. How do you keep it all straight? Well, this all builds into a really simple framework that I call the trader's traffic light. It's basically your all-in-one cheat sheet that brings every single one of these concepts together.
And this is it. This table is basically your decoder ring for the market's personality. Just look how everything connects. By just identifying if JEX is positive or negative, and if Vanna is positive or negative, you can instantly figure out the regime. Like, look at the yellow regime. Positive JEX, negative Vanna, leads to that choppy downward drift we talked about. Each combo points to a specific personality and even gives you a hint about the right kind of trading bias. Seriously, this is the key to the whole framework.
Okay, so a cheat sheet is one thing, but how do you actually use this stuff every single day? Let's make this actionable. It's actually a super simple playbook you can use right at the start of every trading day.
It's a simple 5-step daily checklist you can run through every morning. Step 1, check the JEX. Are we in a momentum or a mean reversion environment? Step 2, check Vanna. What's the multi-day wind at your back? Step 3, check Charm for that subtle daily tide. Step 4, combine all those signals using that traffic light cheat sheet to figure out the day's dominant regime. And finally, Step 5, align your strategy with that regime's personality. Don't fight the flow. But here's a really, really important point. This is not a crystal ball. Even the market makers, the people who create these flows, don't use them to predict the future. As this quote explains, they use these tools to control their risk and to anticipate volatility driven by these flows. And that's the real power.